all of that.
Oh, there's so many fees we haven't gotten to yet. See, y'all, this is why you need to know how much it really costs to buy a home. Hi, I'm Whitney.
Hey, I'm Craig.
And we're the Pothiers. So a little bit about me. I am a certified financial planner and a money coach.
I'm a local real estate agent here in the Austin, Texas area.
And today we decided to create an episode on how to help you more powerfully navigate the home buying process. So Craig and I have done multiple real estate deals together, and we want to help you learn how to make a really great and informed decision on one of the biggest financial purchases you'll ever make in your life.
Absolutely. You know, I think when we think about home buying, we often think about going to Zillow and we look at a price and we think that's it. But there's a lot more to that. There's some hidden fees that we have to take a look at when we think about that. We're going to take a deep dive into all those different fees, and so you know exactly what you can expect to pay at the closing table.
Yeah, and this is going to help you make an informed financial decision, like I said, on one of the most important purchases that you will ever make. So, Craig, tell us, what are, outside of the listing, so we know a house may cost $200,000, $500,000, what are additional fees that are associated with buying a home?
Let's start from the beginning. So you're interested in a house, let's say $300,000. You put your offer in and the sellers accept that. And you're like, yeah, we're going to buy a house for $300,000. But now, okay, well, what's next? So the first thing is you're going to want to pay for an option period. This is on average about $250. What you're doing here is you're buying a set amount of time that you can back out of this contract for whatever reason you want. So let's say you spend $250 and you say, I want 7 days option period, and the seller accepts that, then you have 7 days to bring a home inspector, to bring any inspector for that matter, and to see if they can find anything wrong with the house that you may want to negotiate.
This is definitely something that I am very happy to pay for in every home purchase. That 7-day option period is a really prime time for you to really do your homework and research and make sure that even the deal that you're going after is actually a good deal. So we love option period. So happy to pay this $250. What happens after that?
After that, you're going to pay an earnest money deposit. This is typically about 1% of the purchase price that you're offering. And this is just to show good faith that this offer is super serious. So given that you know you can pay the option period and get out in 7 days, the earnest monies shows the seller that you're really serious about this deal and you're not just some random investor that's going to back out of every deal. So if you decide to back out within the 7 days of your option period, you will get your earnest money back.
Okay. So what comes next after we've paid this earnest money?
First thing I recommend highly is getting a home inspection. That's going to be out of your pocket, and you will definitely want that because there's things that will pop up that you don't know about. Foundation is a big one. Roof. Those are all expensive items that you want to figure out if those things are okay, because foundations can be really expensive to fix if they start sagging, or roofs can be tens of thousands of dollars these days. So you want to make sure that these big items are in good shape.
Okay. And how much is an appraisal?
An appraisal is going to run you probably somewhere between $600 to $1,500 depending on the property.
So we have the earnest money, we have the option period money, and then now we have an appraisal fee. What else?
Other things that will come up is lender fees. So these are origination fees. It's going to be the cost that the lender charges you to process this loan, And this is typically about 1% of what you're going to buy the home for. So if you're buying a home for $300,000 in this case, it's going to be about $3,000 for the origination fee. There's also going to be an application fee, and this is just to apply for the loan. This is not a whole lot of money. It's usually about $75 or so. Other than that, you have title insurance premiums. So what title insurance is, if the previous owners haven't paid their property taxes, they're going to have a lien on the home. And the title search is going to look for if there's any liens on that property that are outstanding, because if there are some, those need to be paid for before that sale can proceed. So they have to be paid for. So that's what title search, it ensures a clean history, and the insurance essentially covers you that if something is uncovered later on, it'll be handled by the insurance. So you don't have to worry about that.
I have a question really quick.
Sure.
So on the closing costs for the loan, can you find loan companies that will waive closing costs for their loans? Or is that pretty atypical to have that happen?
So I think you can definitely negotiate with financing or lender companies. They'll all have their own deals, let's say. Some will waive origination fees. Some will give you a credit. But there's nothing's for free these days. You're going to have to pay something. But yeah, they can definitely help you out.
Okay.
Especially because you can shop for different companies. You can negotiate with them and say, hey, well, this company's offering me this. And then you can see what they'll do for you.
And how much is title and insurance?
Title fees are 0.5 to 0.75% of the home purchase price.
Okay. And what about the insurance?
The insurance on average for the country, although it depends where you live, but right now we're sitting at about $1,600 per year. And that's roughly what we're paying for here in Austin, Texas. I think all our properties are around that area, between $1,600 to about $2,000.
Oh, okay. So when you say insurance, you're talking about like homeowners insurance, like that
insurance,
that
correct.
insurance that we all have to have to make sure that somebody else pays for our house if it burns down or whatever.
Correct.
Yeah.
Now, you bring that up because there also is a mortgage insurance. So that is another insurance that you have to pay. If you do not put 20% down as a down payment, you get charged this PMI, this private mortgage insurance. So it depends what type of loan you get, but for conventionals, I think it's between 3 to 5% of your loan, your total loan costs, and that's what you'll be paying on a monthly basis. FHA loans are even more expensive. I think you're looking at more like 0.5%.
Okay. So far, I'm just going to do a recap of all of our fees.
Sure.
So we have the option period fee, we have the escrow fee, we have the closing costs or loan origination fee. That's the same thing, right?
Well, closing costs are a bundled amount. So closing costs encompass your down payments, your origination fees, your appraisal fees, your recording fees, your surveys, all of that.
Oh, there's so many fees we haven't gotten to yet. See, y'all, this is why you need to know how much it really costs to buy a home. Okay, so it's loan origination fees, appraisal fees. We've talked about mortgage insurance, and we've also talked about title fees.
Title fees, correct.
So you just named a lot more.
I did. So we have surveys. So there are survey fees. In order to close, you need a survey. And so the title company will ask for you to provide a survey. So usually the seller will have a survey on hand. If they don't, that means you're going to have to pay for a new survey.
You have to pay for it, or will the seller pay for it?
It's negotiable.
Okay. I'd be negotiating that.
I believe we had to pay for one on one of our properties.
We did.
It depends on the market that you're in. The market we were just in 2020, 2021, the buyer was definitely paying for that survey.
Yeah.
So it's definitely negotiable, but that can run on average $600 is usually what you'll find yourself paying for a new survey.
Yeah, unless like for our land, we just bought 10 acres, not just bought, but a couple years ago, bought 10 acres out in Wimberley, in which case I think our survey was like $1,500.
Correct.
It was a lot more expensive the larger the property that you have. Okay, so survey fees. What else do we have to pay?
Let's see here. There's the recording fee. That is a small amount, but it's still a fee. It's like $30-$50. And that's what you pay to the county so that they can record the new owner of the property. And so that's in public record, and they charge you for that.
Okay. Okay. What else?
Okay. The next big item that we have on the list here is property taxes. That is a big one. Here in Texas, property taxes it's based on appraisal fees. So every year, the appraisal district, they appraise each house. And they basically set how much this house is worth. Each county has a percentage for property taxes. So I think here in Hays County, it is 2.3%. In Travis, I was looking at it today, it is 1.9%. And you pay that percentage of the appraisal fee. And so if it's a $300,000 house, you're paying 2.3%.
That really is dependent on the state that you live in, right? In Texas, sure, we don't have state income tax, but we do have high property tax rates, which is is why we pay so much in property tax. But you go somewhere like California, Colorado, their property tax rate is about like what, 0.5%, 1%, something along those lines.
Correct.
I don't know exactly what it is, but it's definitely lower than 2.2, 2.3, which is what we pay here in Texas. So that's one thing you really want to consider, because property taxes can be a significant amount of money in addition to your mortgage each year.
They are a lot, and they can affect your mortgage on a monthly basis. So I think would you like to share the story of Lot?
Sure.
Our Lot house. So we purchased that, and it was a full rebuild home. So the original taxes on that house, the appraisal wasn't very high because it was a really old home. And so they were appraising that house at a really low amount. I can't remember what it was. So when we bought the house, we were still paying taxes based on that appraisal. However, the next year, we were surprised that when they saw that we had a full new rebuild with a back house, our property taxes increased our monthly payment by $1,100.
And this was an investment in property for us. And even if it's not an investment property, even if it's a primary, that's still a lot of money. But we had intentionally bought this house as an investment to make positive cash flow each month. Thankfully, we had designed a pretty good cash flow for that property. So we still are making money, not as much as we were previously, but we still are making money on that house every single month. But you can just see how one change in property taxes can significantly impact your mortgage payment each month. So one thing you didn't mention that I want to talk about is interest rate, because this is a really big fee that people need to be aware of. And I think a lot of us are aware of right now in this high interest rate environment, the interest rates that are associated with your mortgage. So can you tell us what that is? And also, I'd be curious to hear your opinion on, given that interest rates are so much higher than they used to be, if you still think it's a good time to invest.
Sure. Okay, so interest rates, this is how the banks make money. They charge you to lend you money. So essentially right now, I think at September 19th, 2023, we're looking at interest rates at about 6.5%, roughly, give or take. And that's for conventional loans. If you borrow $300,000 for a home, they're going to charge you 6.5% of that $300,000 per year. And that's how much you're going to pay on top of that $300,000.
Okay. And so what do you think about a 6.5% interest rate? Like, do you think that's relatively high, relatively low? Should buyers be afraid of an interest rate that high right now?
You know, I think given the market, I think looking at it, there's still not a lot of supply, which keeps the home prices high. And what I can see is that there is a lot of money on the sidelines waiting to come in. And what that tells me is that as soon as these interest rates go down, the prices are going to skyrocket again, because there's going to be a lot of
demand.
A lot of demand.
Yep.
Because there's still not a lot of supply on the market.
Sure.
And so, yeah, I do think it's a good time to invest, because you can always refinance later.
Yeah.
And get that interest rate lower. And what's the interest rate on rent?
What?
It's 100%.
Oh. That must be some kind of realtor joke, right?
That is totally a realtor joke.
It's like interest rate on rent.
If you think about it this way, if you're paying rent, you're paying your landlord's mortgage.
Yeah, totally. So your opinion is, look, interest rates are high, but once they drop, be prepared for everyone to start selling their homes because they want to buy a new home at a new interest rate. And a lot of people that are wanting to buy homes are going to get into the market because interest rates have finally dropped, which is going to skyrocket home prices. And another thing that you mentioned is like the negotiating power has really increased over the past year. So there are costs that can be negotiated right now that maybe in 2 or 3 years, whenever interest rates drop, who knows when that will actually be, you won't be able to negotiate anymore.
I think one of the most important pieces of information that if you're interested in buying a house, there is something called a rate buy down. And you can essentially pay the mortgage company a certain percentage to drop your interest rate. And a lot of the times that is about 1% of the price per percent that you want to drop the interest rate. You can get that paid for by the sellers these days.
Cool. So that can be a really great strategy to actually get that interest rate down. Correct. To actually buy a house.
Yep.
What do you consider the fees, the top fees that homeowners or potential homeowners should try to negotiate in today's market?
Yeah, great question. You can definitely negotiate a lot right now. So we just spoke about the rate buy down. That's the biggest one. You can also negotiate a lot of repairs repairs that you want done to the house, you can just ask for them and they can contribute to your closing costs. Oh, and also shopping for lenders. You can negotiate fees with your lenders. So like origination fees get lender credits, which will, knock down how much you have to pay at the closing table as well.
Okay. And another one of the things that you haven't talked about is realtor fees. You got to pay guys like you, right? So like, how does that work?
Somebody has to pay.
Yeah.
So the way it works today is it's standard. Realtor fees are all negotiable. The seller generally pays a certain amount, and then that gets split up between the seller's agent and the buyer's agent. And that's usually how it is. It doesn't have to be like that, but that's just how it's been for the last few years.
How much money are we talking here?
3% per side.
Okay, and the seller will pay 6% total?
Correct.
And they pay 3% to the buyer and 3% to the seller?
That's been statistically what's been happening.
The most average, but there's a lot of different ways that you can slice
Correct.
that. But still, that's for a seller of a home, that can be another 6% fee. So all of these fees that we're talking about, do people need to make sure that they have money sitting in cash to pay for all of these things, or can they roll them up into the loan? Like, how can people finance this if they've already had to save for a down payment, and now you're telling us that we have 6%, 1%, like all of these fees are adding up to a significant amount of money?
I think the easiest way that you can think about this is you can put 2 to 3% of your purchase price, and that'll be your closing costs on top of your down payment, which is whatever you decide to do, which we generally do 5%.
Sure. And when you say closing costs, what you're talking about is the bundle of cost that we just talked through.
Correct. So things like appraisal fees, survey fees, title insurance, credit check, origination fees, all of that good stuff.
Okay. All right. So, Craig, I think that was a pretty good overview of...
There's a lot there.
I mean, there is a lot there. We can do some more episodes. If you all have any questions specifically on these costs, want real-life examples, put them in the comments below. It was so fun to be here. Did you enjoy doing this?
I loved it.
Yeah.
Thank you so much for having me.
Yeah, of course. You family, babe. All right, y'all have a great week. We will see you in the next episode.